Hello, traders. It's 8:02 a.m. Chicago time on Tuesday, the 28th of January, 2020. This is episode number 1680. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market sentiment is bullish. The Nasdaq leads the pack. Nasdaq's up 75 and a quarter points, 0.84% from settlement, followed by the Russell and the S&P. The S&P is up almost 20 points or 0.6% from yesterday's settlement. The laggard today is the pound. Gold is off $2.90, very small. That represents about 18 basis points on the futures. Settlement to current. The treasuries are a little bit off. The 10 years are only down 3 ticks. So overall, not seeing a big amount of flow into safety, into out of safety and into risk. But overall, the market posture is to trade higher. Yesterday was an interesting day. May have been the basing day for the next leg up. Who knows? We'll talk about that in a minute. In terms of what is on deck for today on the calendar, we got durable goods orders for December, which was much higher, much stronger than what was expected. Expected 0.6%, got 2.4%. We just got the Case-Shiller, which aren't very significant figures. And then after the close, we get the API, accrued stock change. The prior's 1.6, and then this evening we get consumer confidence out of Japan at about midnight Eastern time. That's what's on the calendar in terms of what is planned, what is scheduled. Overall, the market uh, the market is still looking at this coronavirus issue. I believe we jumped from somewhere in the 80s, I believe 86 or 89 fatalities as a result of this virus to over 100. The virus still poses a threat to the world's economy. It is said that approximately 5 million people had left Wuhan before the government came in and enclosed the area and quarantined it. So the spread is not likely to abate anytime soon. Uh, Not much to say about the market in terms of what's new to digest. We'll see. We'll see what happens here over the next few days. Uh, we do have a Fed interest rate decision tomorrow at 1 Central, 2 Eastern, and that's really important. At 1:30 Central, 2:30 Eastern, we get the press conference, and also tomorrow, the president's supposed to sign the USMCA trade agreement with Canada and Mexico. So that's what's on deck. Expecting today to be somewhat choppy, unless of course news comes in, and that's what I'm seeing so far. In terms of review, here's where we left it yesterday. The primary expectation is a push up that ultimately squeezes lower. Responsive buying on the open that fails, and then we turn over and we squeeze lower around the 45 area, the 52-45 area. Which actually looked pretty good, but was looking for responsive. Here's 45 right here, this stock zone. The expectation is it's likely to roll over and be initiative selling, to give us initiative selling that would squeeze us down into 32.20-ish for the range. And then we would have a base and a pop higher, technically likely a V bottom. That's the primary scenario. The secondary is a test down into the prior low or the overnight low, and then responsive buying to get back into the prior day's low, or actually the overnight high, which was around 70. Here's what actually happened. I don't think I can show it. Well, yeah, I can show it here. Here's what actually happened. We pushed a little bit down, and then we ended up squeezing responsive buying to where right into the 55 area. We did rotate at 45 right here and pull back, but this started to look as soon as this second rotation took place. This started to look like scenario two, so I was looking for a push into the 70s. The market, the trade actually became very balanced once we pushed into the 55 or 53 area. It became very balanced and choppy before it released to the upside, sold off into the close. Pretty decent sized sell off actually into the close. One thing to note about yesterday, which those of you who are in Convergent, I kept bringing up while the market was trading, and which gave more confidence on that 45 short, which ended up getting a scale and then pushing through. The delta, which is this pane here, this is the delta. This is a bar chart of the delta. Again, for those of you who are not familiar, the delta represents volume on the offer, buying volume minus selling volume. It represents the volume of the aggressor in the market. That volume, if you go from the very beginning, the zero line for the delta is the opening price, which is right here. These green dotted lines are the opening price right here. 36.75 yesterday, and that would represent the zero line. And if you look at this chart, I don't want to compress it. I don't want to change the periodicity because it takes a bit to load the data. But if you look at this chart, as price moved higher from the green dots, from the green line, as price moved higher, the delta remained below zero. The zero line is right here. So as the market was pushing higher, there's a more aggressive selling than there was buying on this entire climb. So if I zoom in a little bit, this is just how I'm using delta. I find delta to be very, very useful to give me an idea of what's going into price. Here it is. We test lower, so the delta rolls over. We get that. That's cool. Fine. Then price crosses the zero line and pushes higher. Delta remains below zero. It peaks up a little bit in this area, but as soon as this area rolls over at 45, right? This initial setup, the short, it comes negative, and then from there, as price climbs higher, delta goes down. Delta is just continuously going down as price went higher, and that made it difficult to just buy and get long and hold, as it's indicating that either some hedging is going on or there's somebody selling as it's pushing higher. And we don't know why they're selling. It doesn't matter why they're selling. They could be hedging a position, they could be opening a short, or they could be believing that the market's going to go down further. And so they were taking profits off the table as the market was rising, them being probably multiple participants. But the delta was really taking a beating, even though price remained above the zero line. I thought that was pretty interesting. And then all of that comes into play and starts to play together into the close. As the market sells off, we can see that the delta is flat. In other words, price is now finally starting to catch up with what the delta is doing. Okay. So that's a review of yesterday. We had a normal variation day, very standard day. It's the most common day, and then we carry that into the overnight session. The overnight session opens up, and it's quite bullish right off the get-go, and pushes in even higher into the European Open. The European Open sells off again. The European Open has been selling off fairly consistently, but overall the overnight inventory in the overnight session, the overnight inventory is long. The profile is a double distribution profile with the area around 53 being the key area in the overnight session, the over underline. Notice the volume in the overnight session is about 3 times the recent average. We traded 449,000 contracts. That's pretty heavy. I'm expecting the open to be relatively active this morning. Okay. The delta overnight is flat, even though the inventory is long. Let's take a look at ctbookmap.pro. CT Bookmap shows us the heat map and the action in the order flow overnight. The overnight session has been pretty busy. Here's the open. Here's the open right here. Oops. Here's the open right here. And you could see buyers came in right off the get-go and have pushed higher. A key area to test is right there. This liquidity was there all day yesterday at 32.60. We push right into it. We have a collision, pullback, breakthrough, pullback to the collision area for support, and then it fails right through. And then we came right back into this area just now. Very wide swings in the overnight session. It keeps moving between the upper and the lower distributions, back and forth, back and forth, back and forth. And so pretty noisy overnight session, and quite a bit of selling going on these peaks. Every time it got above 32.60, sellers tended to come in and pop it back through. So we'll see how that continues to play out. The liquidity picture for today, 32.66, 32.68 have a fair amount of liquidity. We can see that somebody came in and kind of put in this liquidity right at the same time. So that's suspect right now. But overall, the liquidity is above the expectation as we're likely to continue to drift higher today into that liquidity from an order flow perspective. This is what's expected. We're expected to continue to fill and move towards the liquidity magnet and into the gap zone from yesterday, which is pretty wide. The gap zone from yesterday was like 93 ticks wide in the S&P. So that's what that looks like. I want to take a moment and shift gears for a little bit and just take a glimpse at the big picture. This is my composite profile chart. Essentially, this shows what we've been doing. We were in a consolidation, pretty good consolidation in September. We popped above, pulled back in October, and then all that repo stuff came in, and the market just took off and has been taking off pretty strong. It is the ES is correcting a little bit, but it's very similar to what we had at the beginning of December here. It's very similar kind of structure that we've done. We fall below the 20 simple moving average. This is an RTH only chart. We fall below and we end up higher, and we're likely to come back into line and start to squeeze back into the range of the selling day last Friday. So the overall trend really is intact. I mean, the market is trading in this kind of channel and has been doing so for months. I'm not seeing this as the bears have come out and shown their claws, and we're likely not to push higher again. I don't expect that would be the truth. So we'll see. We trade what we see. We don't trade what we think. That's a tough thing to kind of do, but that's what it takes. Here's what we're expecting for today. Today, it's opening right on the edge here. I'm looking for a reversion back to 53. I'm looking for a base for it to push higher, and I'm looking for it to continue to squeeze into 65 and then 70. I have stock zones in these areas. So I'm looking for that to be to test out and then for it to come back and revert back a little bit on the close. But I'm looking for that overnight high to be taken during the session. I'm looking for the gap mid to be tested. The gap mid's around 69. Um, 69. The other scenario is we open up, we push higher immediately, squeeze into the overnight high, and then come back and consolidate before dipping into the range and then holding for a higher high, higher low, but in balance today. That would make today a rest day. The thing is with Tuesdays is that they generally do not behave like rest days. Tuesdays tend to be positioning days. We'll see how that works out. Okay. So also don't forget that Friday's the end of the month. Not only do we have FOMC tomorrow, but Friday's the end of the last day of the month. So we'll see how we finish this first month of the year. There are many people who attempt to predict the rest of the year based on the performance of January. So we'll see what positioning takes place on Friday, but the market is likely to hold steady um, in anticipation of what the FOMC will do tomorrow in the rate decision. Okay. Good luck today. I'll catch you tomorrow morning. Take care.